Hi guys! This month my portfolio saw both sides of the market. I took a $10,000 profit on one stock but also kept losing big on another one. What did I buy? What did I sell? Like always, full transparency, I'm revealing everything. We will see how my stocks are performing and what's my next move. I've added timestamps, even if it's a short video, feel free to skip to the part that interests you. During the last few weeks, we got the results of two of my holdings, Abercrombie and Elf Beauty. You have been asking my takes on the earnings and if I still holding my positions. So let's start with Abercrombie, ticker ANF. I've already spoken about this company in several videos because it's currently my biggest loss since I started this channel. I bought it here at $103 before Liberation Liquidation Day, and I've been deeply in the red since then. My investment idea about Abercrombie is very simple. This company is extremely cheap compared to the rest of the market, and with time the price should move higher and realign. To better give you an idea about how cheap it is, consider that in the last 12 months, Abercrombie made more than $10 per share in profit while trading around $80. With a price-to-earning ratio around 8, we are paying just $8 for each dollar of profit. Let's take the two major brands in fashion that recently also crashed, Lululemon and Nike. People are saying that are bargains, that we should buy them, but Lululemon has $14.70 in profit, but is trading around 265 with a PE around 18. Nike has $3 in profit, trading over $60 and a PE around 20. Both companies trade at more than double the price of Abercrombie. ANF is also growing revenue, unlike Nike, has reasonable debt, and a long history of buybacks. It's very hard to find similar deals in the current market, so with this cheap valuation I was not surprised to see the company jump 30% after earnings. They reported record sales of $1.1 billion, up 8% year over year. They never sold so much before, yet the company is down 57% from all-time high. Hollister, one of their brands, grew 22%, posting its 8th consecutive quarter of growth. Overall, the management keep posting great results, and that's the most important part right now. However, I'm regretting not being online when the market opened at $103 after earnings. I would have been able and happy to liquidate part of my position right here and break even. Even if I believe it's a bargain, I feel too exposed. It's kind of too big part of my portfolio to be a fashion company. And my issue with fashion is that it's basically impossible to have any kind of solid and durable moat. Even Nike is losing market share lately. The sector is so competitive and the barrier of entry are almost non-existent, we can be sure any of those companies will be around in 10 or 20 years. So even if I believe it's deep value and the share price will go up, I will be comfortable to have 5-10% invested in it, not 25%. Anyway, I was traveling in Italy while they posted earnings, so I missed my moment to lower my exposure, and again, I'm down big. I don't want to lose money on a company I believe is deeply undervalued, so I will keep holding. Before we go on, it would be great if you can take a moment and click the like button. I would really appreciate it. It would really help me to reach 500 subscribers. Even better if you can leave a comment, ask me anything. I would make a video to answer your question. Thank you. Next, Elf Beauty. Earnings went very well, 25 quarters of consecutive growth. They are gaining market share around the world, especially with the young generation. This company and its management are really strong. However, 75% of their products come from China. Given the current environment, this is a substantial risk factor in my opinion, and there is so much uncertainty around it that the management prefer not to give any guidance for the full year. Anyway, the highlights of the earnings was the decision to buy another cosmetic company, Rhode, for $1 billion. Rhode was founded by Hailey Bieber, the spouse of Justin Bieber. I don't have enough information to evaluate if Health made a good deal or not, since they didn't release many information about Rhode. I don't know the growth, the margins, the profit, the cash flow. So, in general, I'm always skeptical about big acquisition because usually are money disruptor for shareholders, and the fact that they didn't release all this information doesn't really help. Let's just say that investing in Health right now, it's clearly riskier than when I made my video. I entered at 64 and, well, now they have less cash, more debt, a new company to integrate, and especially the share price almost double. So this is what I was saying in my last video. If Health price suddenly rises to $100 after earnings, maybe I take profit. Let's see. But let's just say that I'm happy holding while they execute. Well, we are here at 117 with an increase in risk. I was happy to exit and take profit. I made 10,460 in just 2 months. As you can see, this is my 4th position I've liquidated in the green since I started this channel. Celsius, Logitech, HIMS, and now Health also went in the right direction. I'm super happy. I made 36,000 just in a few months, so I have liquidity ready to invest, but I'm not finding any super compelling deals. As I said in my last video, check it out if you haven't, there is a lot to be careful, so I used a tiny portion of my winning to make the safer bet I have at the moment. I bought 50 shares more of Google at 169. Why Google? 5 words. YouTube, Gemini, Waymo, Cloud, big profits. These are my current holdings. 5 stocks only, Google, Airbnb, and Booking are my main conviction for the long run. As long as they keep delivering, I could potentially hold those trees for years. Instead, Abercrombie and Yeti are the only 2 speculative bets left. They are both in the red, so we will have to wait a few more months and see what happens. Clearly, they don't have a strong dominance like Google, so there is more uncertainty, but I don't expect them to go bankrupt anytime soon. They're both strong businesses, they're both generating plenty of free cash flow, especially compared to the price, so I expect the price to go up, hopefully soon. I would like to have another opportunity like HIMS, like Celsius, like Health, to put my winnings, but currently the market is very, very expensive. Basically what I need is for Trump to go crazy one more time. Go Trump, go crazy. Please let me know if you found any bargain recently that I should look into. That's all for this month's portfolio update. Thank you. Thank you for watching Other Economics. See you next week. Peace out.